Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing and also give you a few key takeaways to help you navigate the markets yourself. So, herd immunity, let's talk about what that means and why some statistics actually say we may have already achieved it. Jobs market, a lot of jobs out there, not a lot of job seekers, why that may be changing soon. And then finally, I think the market's been muddling along here during the past 6 or 7 weeks. Let's take a step back and talk about historically what we typically see during year two of bull markets. And so, herd immunity, what's that mean? Scientists are not totally in agreement. I've seen ranges between 60% to 85% of the population. When you reach this point, basically it means the virus has a tough time spreading throughout the population. If we combine two statistics here, not only the number of people that are vaccinated, but combine it with the number of people that have actually contracted the virus and build up those antibodies, some debate about how long that immunity will last. But if you add those numbers up, we might be north of that 70% area within the US. So, based on these statistics, which are admittedly debatable, we could potentially be experiencing herd immunity right now. Now, the jobs market, despite many states starting to reopen across the US, not as strong as many people would like. And there's a couple reasons, but one of them I want to focus on is the extra $300 unemployment benefit that states are receiving from the federal level. Now, if you do the math and calculate it out, it equates to just north of $17 per hour. That's more than double the minimum wage. And the argument that many states are making is that, hey, job seekers are either number one, not motivated to go work when they're making this much money for not working, or number two, choosing to be a little more patient and looking for the right opportunity and not seeking as aggressively jobs. Now, more than 20 states are announcing that they're going to stop receiving these benefits. And if you look at the states that have announced it, on average, these states have an unemployment rate 1.5% below the national average. On this graph, they've kind of reversed it to show the improvement above that line to where a negative is a positive, but the story is the same, 1.5% below the national average for the unemployment rate. So there might be some credence to that argument. I think we may see that labor participation rate increase over the next 1 or 2 months. Now let's take a look at the bull market. We just had the 1 year anniversary here about 2 months ago now. So we're about 2 months into year two, but let's take a look at what we can expect perhaps the next 10 months. On average, number one, we're only about 14 months and 90% into the bull market. If you look back at all the bull markets since 1932, they averaged about 62 months and 183%. So from those stats, you might argue we're kind of in the infancy stages based on the averages. Now, we had a really, really strong year one. You see that near 75% compared to the average 49%. Year two, what we see is momentum still positive, still above the long-term average for stock market returns, but dramatically lower. So momentum tends to continue, but not quite at the pace that we experienced during the first 12 months. And number two, volatility. We've been very, very fortunate, knock on wood, in 2021. So far, we've only had a peak to trough intra-year drawdown of 4% on the S&P 500. If you look all the way back to 1987, the average drawdown is actually around 15%. So as much as we don't like them, these 10, 15% drawdowns during healthy bull markets are not that abnormal, and they're pretty typical. And what we've been experiencing, at least during the first 6 months of the year, has been pretty abnormal. So what we'll see, maybe we end up with an abnormal year. I mean, everything was abnormal last year, so maybe it makes sense we have something unique. But if this ends up being the stat, 4% drawdown for a year, that would be the third lowest intra-year drawdown since 1987. So we'll have to wait and see on that. But remember, volatility is still part of the stock market during bull markets. And then finally, in Philadelphia, not quite waiting for herd immunity, a restaurant owner, to celebrate his birthday, decided to rally together chefs from the area to try to construct and break the world record for the longest cheesesteak, and they reached it at 510 feet. So couple takeaways on this. Number one, I zoomed in on this. I'm not an auditor for the world record, but it looks like they just piled a bunch of different cheesesteak sandwiches together. I don't see that bread connecting. So I don't know what the rules are on that, but just an observation. And number two, we're expecting this return to normalcy. I think people are pretty excited to return to these social interactions. And this is probably not going to be the first street party that we're going to have as people start to gather with these festivals during the next year or so. With that, I want to thank everyone for watching, and I'll see you next time.